On today's episode, we are going to take a look at why in the past few days, fintech stocks have been killing it. They've been doing great. And it all started because of a shareholder letter from a big bank that actually has fintech stock investors pretty bullish. After we take a quick look at the letter, we're going to take a look at a few fintech stocks, some that I enjoy right now, and just take a quick look at their type of growth that they're seeing, at some of their price targets, and I'm going to share my favorite one. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and follow me on Twitch where I live stream, taking a look at stocks you want me to look at. And don't forget, let me know in the comments below which is your favorite fintech stock right now. But before we begin, let's take a listen to today's sponsor. I want to thank the Motley for sponsoring this video. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So like I mentioned in the beginning of the episode, right, fintech stocks have been doing great in the past few days, especially yesterday on Thursday. Stock prices were up high single digits. And I want to say it's all thanks to this shareholder letter that JP Morgan sent out. And the CEO of JP Morgan pretty much said that a huge threat to banks right now is the fintech market and all these fintech businesses. The CEO mentioned that fintech companies are making great strides in building both digital and physical banking products and services, from loans to payments to investing. And he says that they have done a great job at creating these products. So I want to say this is obvious to most fintech shareholders, right? If you're a fintech, if you own any of these top fintech stocks right now, you would be like, yes, this is obvious. Why is this really driving the stock price? I mean, it's a whole different level when the CEO of a big bank comes out and actually says stuff like that. It really shows how huge of a threat this fintech business is doing to these big players. There was also a pretty cool survey that on 2020 that McKinsey & Company did about fintechs, and they saw that fintechs are catching up with traditional banks in terms of customer trust. They obviously saw that Gen Z and millennials are the biggest growers of this fintech market, but they did see in this survey that a substantial number of baby boomers rely on some sort of fintech account that contradicts the general perception that digital tools are exclusively for younger people. I mean, a few months ago, I sold, for example, a used car, and the person that bought the car was an older gentleman, and he was fine doing all the transaction through some form of digital tools opposed to a traditional banking way, right? So again, it shows that even the older people are also into this type of digital tools in the fintech business. So even though JP Morgan released this a few days ago, the stock price hasn't really moved much. I think investors still believe that financial institutions like JP Morgan are kind of undervalued at the moment. And this stock, for example, JP Morgan right now is sitting at $155. And in the past 6 months, the stock is up about 53%. So it's definitely been a good 6 months for investors. So congratulations if you're holding a JP Morgan. From its all-time high, the stock has barely dropped. It's down 1.6%. This obviously has not seen a correction like some of the growth stocks, like some of the fintech stocks we're going to see later on. And I wouldn't say, even though this was kind of like showing a weakness to banking systems, I do believe understanding who your threat is and really bringing it out to your investors it's a good step forward, right? I wonder what type of growth JP Morgan is trying to do, or what type of innovative decisions JP Morgan might try to do in the future to really try to combat some of these fintech giants that are coming out right now. So the first fintech stock I'm going to take a look at is probably one that many know, and this is PayPal. So we can see PayPal was up 3%, 3.5% for the day. And obviously, I want to say growth stocks have been up lately. So that has definitely been driving the stock up as well. A mixture of both, I want to say. So PayPal is up in the past 5 days, 6.5%. So congratulations to all long-term investors right now. Unfortunately, from its peak, the stock is still down about 13%. Not as big as some of these other growth stocks right now that have taken a hit. And it's funny, right? I'm calling PayPal a growth stock. And how? Why is that? Analysts believe this company will expect to grow 16.6% on average for the next 3 to 5 years. So this is definitely one I would consider a growth stock right now. PayPal is profitable and they are positive in cash flow from operations. So they're one of those growth stocks that is producing positive results already and has a very strong fundamentals. Right now, there's about 37 analysts that are looking at PayPal. Out of those 37, 33 give it a buy and 4 give it a hold. The average price right now is about $307, and that gives us about a 20.4% increase from current levels. So analysts are still very, very bullish on PayPal. All right, the second stock we're going to take, the second fintech stock we're going to take a look at is Square. And many people, I want to say, still consider Square a form of point of sale only. But Square has done really great job with moving, especially here in the United States, with doing a lot of lending. They were a big player in the PPP loans that the United States gave out to small businesses here. So this is ticker SQ, is currently sitting at $258. In the past 5 days, the stock has gone up 11.7%. In the past 6 months, the stock, unfortunately, from its all-time highs, is down 6.3%. All right, this is pretty impressive. Square, even though it's a huge growth stock, many people believe that it was both a COVID play and it's also going to be a reopening play. It's one of both worlds. It has a market cap of $117 billion right now. Square just announced that they have an early access program for their Ireland business. So we can see they are expanding internationally. And this is why investors are pretty excited about the company. Currently, there are 33 analysts watching Square. Out of those 33, 20 give it a buy, 10 give it a hold. That's actually an insane amount. And 3 give it a sell. Right now, the average price is about $276. And analysts only predict about a 7% growth for the next 12 months. We can see PayPal is actually a bit stronger in form of analyst bullishness right now. One thing I do want to say is Square is expected to grow at crazier levels in form of revenue, 18.5% on average for the next 3 to 5 years. They are profitable in earnings and they're also positive in cash flow from operations. PayPal is a little bit ahead in that form of fundamentals there. They're a little bit stronger there. And I'm actually surprised that analysts are a little bit more bullish on PayPal than on Square. The third stock I'm going to take a look at is PaySafe, and PaySafe was up 1.2% yesterday. And in the past 5 days, the stock is pretty much flat, right? About 2.2%, not much of a big deal. PaySafe right now, this market cap is not the true market cap. It's still giving the market cap of the SPAC it merged with. But for those that don't know PaySafe, they are a form of payment platform. Their core purposes are like digital wallets, online cash solutions, payment processing. Even though they don't offer too many, I want to say, fintech services outside of that digital wallet and the cash, online cash, which I do believe is a big thing. PaySafe, I still believe, should be in this fintech name. So PaySafe, unlike the other ones, is not expected to grow at crazy levels. For the next 3 years, it's expected compounded annual growth rate of around 10, where the other ones were in the mid-teen levels. Still pretty strong. PaySafe is a company that is positive in the beta values, and I do believe it's something investors who are looking for a fintech business not growing as fast, but can still provide some type of returns, PaySafe can make it on that list. Right now, there's really not many analysts looking at the company, only 2, and those 2 give it a buy, and they give it a price target of about $19, which is a 35% increase from current price. I do believe PaySafe can do great returns in the future. And later on at the end of this episode, I'm going to talk about my favorite. The next one we're going to take a look at is IPO. This is currently a SPAC and it was up 5.4% for the day. And in the past 5 days, it has returned about 3.6%. It's been pretty volatile. IPOE is a SPAC that's going to merge with SOFI. And I believe out of all the ones we're looking at, SOFI is probably the biggest fintech competition on banks, right? So SOFI here, we can see they have like SOFI Invest, where you can invest, you can handle your money here. They have a form of credit card. They have student loans. They have private loans. They have private student loans. They have home loans. They even have insurance and small business financing, even auto loan refinancing, right? So they have all these types of traditional banking products at their digital in the digital form of way. If we take a look at a future growth for SOFI, the company believes it's going to do pretty strong results. In 2021, 58% growth. In 2022, 53% growth. In 2023, 40% growth. In 2024, 33% growth. And they're expected to be adjusted EBITDA profitable at the end of 2021. So you can see they already have revenue. They're already growing at strong levels, but they're still expected to continue that growth and become profitable. So SOFI is definitely one that many investors should keep an eye out. The only thing I would say is because this is a SPAC, right now it's pretty high from its nominal value. It's sitting at that $18 where the nominal value is around $10. So there's some type of risk, right? We've seen it with SPACs. They pull back pretty big. And most of these SPACs that we are seeing right now that have gone post-merger are a lot closer to their nominal value. So obviously SOFI has seen, IPO has seen a form of correction, right? It is down about 30% from its all-time highs. Definitely a correction, but still something to keep an eye out that there is some form of risk right now when buying a company like this. I'm going to take a look at two more fintech SPACs. These two have yet to give any form of announcement on who they're going to merge with. But if you are bullish in the overall fintech market and you wouldn't mind having a bit higher risk, I personally would not do them, but I feel like there might be some viewers who wouldn't mind seeing what other type of risk to reward is out there. So then we have IPOF and we have IPOD. These are two fintech SPACs that have yet to announce who they're going to merge with, and they're a little bit closer to their nominal value. One is at $11.14, that is IPOF, and IPOD is at $11.35. So these are, again, major risk, because what if they merge with some lousy company or a company that's still super early on in its stage? Maybe investors might not like it, and the stock and it would probably drop to its nominal value. So now my overall thoughts on which fintech I like the best. So I do want to say I am very bullish on PayPal and Square. Those are some real companies that have been here for some time. I've known their products. I've seen their product. So in form of how comfortable I am with their products and how comfortable I am with their fundamentals, right? I've looked at them numerous times. Square and PayPal are probably my favorites right now. One of them that I don't own right now but could make the list would be SOFI, right? SOFI is hitting some great markets. They do some great products. And SOFI, I think, is probably one of the biggest threats because they offer so many products that a traditional bank offers. SOFI can really make the list. The only thing I did not like about SOFI is how high it is from its nominal value right now, right? The PaySafe did seem cool, right? I do enjoy it. It's more of a slow grower. Probably not one I'm thinking of adding or buying anytime soon. And the other two that we look at was IPOD and IPOF. And those are just SPACs that have yet to announce, but they're going to work in the fintech market. I probably wouldn't play them, but like I mentioned, maybe some of my viewers wouldn't mind looking at them and just seeing that, hey, this has probably a higher risk to reward at the moment. So I hope you guys enjoyed. Take care, have a good night, and see you next time.